What's going on, everybody? Welcome back to another weekly market update. We come out with these videos every single weekend, kind of getting you the update on what's going on in the market, where is the market going to go, and we've been so spot on this pretty much this whole past since the beginning of the year, really since always. So if you're not subscribed to the channel, make sure you subscribe, hit the like button, leave a comment down below. Let me know where you think the market is going, and let's get straight into the chart. As always, let's look at the S&P 500, what happened last week, and what's going on this week. So last week we saw a pretty much somewhat of a decent start to the week. We had this nice little bounce here up to 430. We got rejected pretty hard on 430, and we closed the week. We closed it really, really red with this bearish engulfing candle here. As you can see, kind of engulfing this other candle, closing around 420, 420.7, and kind of looking for the next leg down. So we're also getting big attention here. Look what we're getting right around this level. This green line is the 50 MA, and it's about to cross below the 200 MA, the purple line. So that will cause a death cross. It already crossed below the 100, and as you guys can see here, once it crossed, really pushed, made this leg down. And now we should see this probably on Monday, maybe Tuesday. If we do see this, probably see some more selling off. We're definitely looking to get below this low, and we've been saying since the beginning, we definitely think that we're going to get below this low, 410. We're really aiming for this 400 gap fill here. As you guys can see, we have a gap we haven't filled there, and it's pretty much also the bottom of this channel here. So you guys can see from the beginning of the year, just making, grinding down this channel, looking for pretty much this bottom down here. And then this is where we believe the bottom will be, around this 490 to 390 level, right? You could go dip a little lower, maybe fall to 397. Doesn't matter too much, but that's kind of like where we're looking for the bottom to get filled. So we're looking for this bottom to come in the next week, maybe around, really we're aiming for around March, sometime after the Fed meeting, pretty shortly after, maybe even on the Fed meeting day, once the Fed, announced their interest rate hikes. So we do kind of expect this to be near the bottom or around that $400 level. So I do think tomorrow will be another red day, and probably pretty much the rest of the week. But then we should be out kind of like carving out that bottom. I do think then we might be able to break up after that. As you guys can see here, we're pretty much kind of forming somewhat of a falling wedge. So if we can fall through and get this bottom, the falling wedge somewhere around there, and then kind of break through and kind of going for have a breakout and have another push for all-time high level, and kind of see the bottom, the top around that $500 mark, and then go into a longer-term bear market. I do not think this is the bear market that we're kind of looking for, that the long-term bear market. I do think that we might still see some more selling off, and being in the belief of us selling off this pretty much all past 3 to 4 months. I do think we'll be filling this gap at 400, but I do think after that we'll be carving out somewhat of a bottom around this level, and then push back up. Now there is a possibility that I am wrong, and the possibility would be if we see this head and shoulder here play out, and we kind of have been hanging around this neckline, and this head and shoulder could take us all the way to around 360, pretty much the bottom. If we take a look here of this longer term bull channel that we've been on since 2008, that is a possibility. I do not think that's going to be happening. I could be wrong. My speculation is that we'll bottom around the 400. That's what I think is going to happen. I don't think this will be the top of the bull market. I do think we have another leg up at some point later into this year. But just we also gotta be realistic and understand all the potential possibilities. So I'm throwing it out there for you. But definitely looking at this death cross coming into next week. Now let's take a look at the triple Q. Of course, the triple Q looking much weaker than the S&P. Has had the death cross already play out. You guys can see the green crossed past the purple, can get over the 20, and just really been struggling. And if we zoom out, we've talked about this for a while now. We're at the top trend line from the long term, from the, let me fix that, here you go. And we've been talking about this for a while. We're still holding this somewhat of support. We're breaking below it, and kind of looking to go lower. This is pretty much the long-term bull channel they've been in since 2008, as you can see here, and we, after the overshot, we're looking to fall back in it, and there'll definitely be some really negative news, just looking for more downside here in the triple Q. Low tech, of course, been lagging behind as interest rates go higher, so we're pretty much looking to find some support level around this. If I get my trend line right, we will be looking to find some support probably once we break through this level, maybe around 310. That's what we're looking for, 310 to potentially 304 on top of this previous all-time high level here. I'll probably find some strong support around those areas, and then I do not think we'll be heading towards this lower trend line here, but it could be possible. Triple Q just looking so much weaker. Has the death cross fully complete? If this momentum of the 200 really starts turning down, could get uglier. Now, a misconception is that the death cross always lead to a bear market. They don't always have to lead into a bear market. They could just be an indicator of a bottom forming as well in the process of another leg up. So I do want to take that misconception out of there. Just because something forms a death cross doesn't mean it's going to be a bear market, guaranteed. Next up, let's take a look at the IWM. IWM here, looking ugly, just as bad, maybe a little better than the triple Q, but it really has been lagging behind. That cross completed weeks ago, and that's what we saw this massive leg down. Had formed this bear flag. Bear flag has completed, and it's pretty much now just kind of in this new square that's formed. The IWM just loves squares. As you can tell, we were here for pretty much a whole year, and then we finally, we had this fake here, this fake breakout here, and then just came crashing after. Kind of a week off distribution range, and then kind of came down and now forming this longer term, bearish box. But to really get the confirmation, we will have to drop out of the 190. We haven't got that there yet. IWM kind of looking, like it could really still go either way. As in, it needs to either drop below 190 to go lower, or break above 210, 211 here to go higher. Doesn't change much. IWM doesn't like to really do much. Has a strong double bottom here, and that's potential levels I'm looking at. If we can fall below 190, I'll be looking for us to come to gap fill between 165 to 167 down here. Definitely has the possibility to fall hard. Also, there's a tiny little gap here on 177, 178. It could be another target there. But if we do hold this and we do finally try to find the bottom here, could also reverse up. And I'll be looking for some calls above this 210 level here. They really need to get above. So pretty much been just chopping down demand, rejected on supply, demand, rejected on lower supply, because here we made a higher low. So definitely could still go down. IWM, nothing has changed much from last week. And now let's take a look at gold, and gold has been one of the thicker that we've been spot on. You guys know that we bought gold way back around the 170 levels when we saw this first seeing this breakout right below here, and we made so much money on this. It's not even funny. But now gold, we're seeing a pullback. Still looking great. I love this pullback. We can't expect to just go up the whole time. I would love to see a pullback 1 to 182.5, or preferably really 178, 177. I just don't think we'll see it. Now, if we don't get this pullback to 182, which to kind of next week we go in more into a green type of week, could definitely see a move up to fill this gap here and potentially have another push for the all-time high level. Well, not the all-time high level, but the recent all-time high level at least. Pretty much looking for trying to break this 195 and then really go even more parabolic than it already has. But we definitely can see some consolidation between 180 to 190 for a little bit till we finally see that next leg up for gold, because this already has been such a strong parabolic move up from gold, and now we're seeing all the EMAs that bunched up together starting to curl up and crossing over each other, looking really bullish after pretty much 2 years almost of consolidation in this area here, forming this massive bottom, and now having such a strong breakout. And you guys all know the goal, our target goal is around the 260 level, 2600 if you're looking at the GLD as well. So right now we're just kind of waiting, letting it do its thing, come back down for us to give us better entries after some good profit taking and looking for the next leg up. I think I like to put out is XME. XME, the ETF for gold and silver and other precious metal. We've been spot on with this. XME has just been so great to us. If you guys watched our video 2 weeks back, We bought it at this dip here when it was up in the 50s, which we had been already in XME. I told everybody in a video that I was looking to get back in on the 48 level on this retest, and I actually had this drawn out, hit it, then bounced, skyrocketed up, hitting perfectly our resistance here at 60. And that's what we've been taking our profits now, and we're kind of looking to see some nice accumulation. If we get a nice breakout, I'll definitely be looking to add more to my position and reposition it and push for the next level, which will be 77. Again, same with gold. Look at all the EMAs crossing above each other. If we zoom out a bit, you can see even better. If we go to the weekly time frame, you see XME really trying to go for the 77 level, and above that really has room to 100. That's almost guaranteed. So it's kind of what we're looking at with gold and a lot of these miners. Take a look at TYX, the 30-year. The 30-year bond yield. This will really cause that massive dump on Friday, right? We saw the TYR kind of like it's breaking out, crossing above the 200 MA. It's been in a bear market. Look at the 200 MA. Been rejecting on it multiple times, and we're finally closing above. Even rejected last week when you tried to break above, I got rejected. The market like that. The market does not like the 30-year bond to cross up and start really ripping. If the 30-year gonna rip, gonna really hurt equities really bad. We did close above it. We find support here on the 50 MA, and if we get a 20 cross over the 15 and the 15 and 20 cross over the 200, they can really get bullish for the TYX, and we really don't want to see that on the weekly time frame. Kind of create this cup and handle pattern. It's very similar to how the 10-year created it not too long ago, and that was ripping. So it can really get dangerous here. We really do not want to see this above the 2.5 level on the TYX. But we will have to wait and see how this plays out for next week. If we look at the TNX, another one it would be pretty spot on for. As you guys can see here, cup and handle, strong breakout, falling wedge, retested this. I mean, look, doesn't get better. We had this nailed spot on, retested this 1.67 level, and now boom, another bullish engulfing candle, looking to go for that 2.6 level, maybe potentially up here around 2.6, and it's just not going to be good if the bonds are going to start ripping in these next 1 to 2 weeks. That's not going to be good for equities or growth stocks. Now, if we take a look at the US oil, we can see that one had a massive breakout here. Again, kind of in this danger zone that we talked about for the last few weeks. We really don't want to see oil over 100. That can really be bad for the market. Usually when the oil goes that up, is usually followed by a big crash. As you guys can see, every time it kind of gets near those really high levels, falls a crash, and then usually the stock market crashes at the same time. So the oil, a retest of this trend line would be ideal of 100. You could long oil potentially for another push up. Could definitely see these 147 levels. But right now, for me, I just wouldn't touch much of it. If we do break again above 110 and we do hold that 110, then you can see for another move forward to 150. But for now, kind of watching oil, not looking for a trade. We had looked for a trade when we saw this fake out here, thinking that oil might go down, but actually just put in another bullish engulfing on the weekly, and then this ugly topping tail here. But kind of didn't close too bad after forming this pretty ugly topping tail. So definitely oil could still see some room up, especially if equities are going to be struggling. A lot of investors are going to be looking to put into oil, gold, and other things. Also, another one I like to talk about is silver. Silver, another play that we've been in on the weekly, looking good. Broke out this little range that we talked about. We were accumulating low on this lower side, kind of like looking like a wick off reaccumulation on the weekly. If I'm being completely honest, it looks like the climax selling was around this $19 and $20 range. Recently broke out of the halfway point of this accumulation zone. Did find some resistance here around 25, which was to be expected if we drag it out around here. So what we're looking for silver is really to push up next week, look to break out 25 and then eventually 26. Still looking good for me personally on these longer term calls, and this is kind of the gap that we're really need to get above here, this zone since pretty much 2011. Above that, silver could really see mid 30s, and who knows, even 40s eventually. But I do think silver still has a lot of upside as long as it holds this $23 level here. They find support on the 50 MA. If it falls, if breaks below this, could go back to 20. Burnout still looking great, and that's kind of like the plays that I'm looking at for next week. The potential overall state of the market, still a very dangerous market, guys. Be careful out there. If you're not in the chat room, get in the chat room. We've been printing money every single day. Best chat room around, hands down. It's not even close. Members are just making so much money lately. We've been so spot on with every single trade. We've been spot on with pretty much understanding where the market wants to go and how everything has been happening on the technical analysis. And yes, there's been some crazy news out there as well that we've been hit with. But remember, the technicals are always ahead of the news. If you're one investor, if you're a trader that's looking at news, you're just lost and you don't know how to read charts. So please go learn how to read the charts and inverse the news. Because when we saw the Ukraine invasion, when the news actually hit, the stock market reversed. It didn't sell off. The selling off was happening before. So you gotta be ahead of the news. As always, if you guys like this video, if you want to learn more of the stock market, if you want to just watch more videos, educational videos that learn about the stock market, crypto market, how to trade, just subscribe to the channel. Trade live with me every single day. The link is in the bio. Take advantage of the sale, the bundle sale. If you want to learn how to do technical analysis, we got a course out there for you, so make sure you check that out. And let me know in the comments below, what video should I make next? Peace.